Hi everyone, Chad Krober here, your purpose-driven lender, coming to you with our January economic update. So the Biden administration has been inaugurated and they are already laying out their communication around their goals and objectives for the next 4 years. I think one of the first common themes that I'm reading in the reports that I'm finding is a desire to raise corporate taxes and increase the income resources of the federal government from those companies. Second focus would be a focus on green energy, renewable energy, trying to set up the country to begin moving away from consumable energy sources and moving towards renewable or ongoing energy sources that don't demand as much work or, resource consumption, to say. So an example might be like the sun or the wind, because they exist, and once you get the machinery in place, it continues to provide the solution that you need as long as the machinery works. And then lastly, continued focus on getting vaccinations out to the country as quickly as possible, and more economic stimulus to see our country through the next year before the economy really fully opens up and takes off like a rocket. I personally, just in all the research that I've done, am excited to see that we are getting closer to the end. Though when you go back and research the Spanish flu pandemic 100 years ago, that lasted almost 3 to almost 4 years in some cases. And so we're not out of the woods yet. I'm very grateful that we have the technology and the resources today that we can quickly close that time gap on COVID, and that we can get vaccinations out to the country and around the world to get our herd immunity to the highest level we can to minimize the damage going forward. But this economy is being held back right now because of COVID. And once we're back at full strength, it is going to take off like a rocket, and it's going to be pretty incredible to watch. So what are some of the things that we need to be aware of as the Biden administration executes on these tangibles and as the economy prepares itself to take off like a rocket? The number one thing we need to pay attention to is inflation. And so if inflation begins to kick in, the Federal Reserve will take actions to try to keep it in check. Because if inflation increases too quickly, our cost of goods, of what we pay for things on the street, will increase significantly, and that can affect every single consumer household that buys goods and services in this country. A prime example of where we experienced this at a very high level was in the late 70s and early 80s, when interest rates went up to 15%, 16, 17, 18%. It was unlike anything our country had ever experienced. And so the Federal Reserve is committed to doing whatever they can to keep inflation in check. The second key piece that I'm paying attention to is the Federal Reserve is also purchasing mortgage-backed securities. Once they begin to cut that back, there will be less consumption of mortgage-backed securities, and so the market will begin to move towards what we would call a more true market. But what that also means is that investors who are buying mortgage-backed securities are probably going to demand higher interest rates. And so that will move interest rates higher at that time. So as we go forward in the coming months and year, be paying attention to headlines around inflation, be paying attention to headlines where the Federal Reserve is issuing their opinion of what they're going to do to help keep the economy going and keep inflation in check. And then lastly, obviously, pay attention to what the Biden administration is communicating and whether or not they're going to be able to move that through Congress based on their tax policies, their green energy policies, and economic stimulus. All of those will have an effect on us going forward and have a trickle-down effect with interest rates in the coming months and year. Reach out anytime with any questions that you have. I look forward to speaking with you. Have an outstanding day.